Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I'm a professional trader and a programmer as well. And in today's video I will talk about the butterfly advanced formation. I will reveal you some secrets using Euro-Dollar 1 hour time frame, for example, as an example. Okay, first of all, we should know the rules for butterfly advanced formation. Go to my website www.ps-software.net. Okay, click on that learn the patterns tab, yes, and choose butterfly advanced formation. Here it is. Here you have the detailed description of the butterfly advanced formation. It is divided into three sections: identification, execution, and management. If you only is obsessed by identification and you forget about execution and management, you will fail. So you should have all the three. And as far as I know, there is no free resource that will give you the trade execution and trade management for free. So I think my website is the only one. Okay, bookmark it here and go to use it at whatever time. As for identification, as far as the identification goes, we have it this way. We first have the standard rules and then we have variation rules. So this doesn't mean that I first trade this and if I find it comfortable I switch it to that or whatever. I am using only one fixed method. I am consistent with one set of rules, and people who asking me for that are actually stupid. So keep in mind that there are variations. So the pattern, how can I explain that? So there was a guy called Bryce Gilmore that invented the pattern, but he didn't apply any Fibonacci's to that. He just draw the major structure of that this way, yes. So then there was a guy called Larry Pesavento that did apply some Fibonacci's, and he calculated that the C point should be that, B point should be that, and another point should be this. There was also a guy called Scott Carney who said that the C point should be this, B point should be that, and another point should be this. There were also guys from Trade Empowered like Jason Staples, Akil Stokes, Jason Greystone, Charles Miles, Darren Oglesby, and they said that the butterfly should be this and that should be that. So we have many people that treat butterflies differently. Every guy has his own set of rules. I have taken the most common, the most popular, the most reliable ones. So this is the standard set of rules. This is the variation that is commonly used by Akil Stokes, by me personally, by Jason Stapleton and Larry Pesavento. If you want to have that rules that are used by Scott Carney, just go to harmonic. Whatever is called harmonic is the rules for Scott Carney, of Scott Carney. And within the harmonic approach you will also find perfect and standard patterns. So there are variations of perfect patterns and standard patterns, and Scott Carney trades both of them. Sometimes he trades perfect patterns, sometimes he trades standard patterns. Okay, so variation doesn't mean that the pattern is better or the pattern is worse. It means that you just have this set of rules. It is the set of rules that you have backtested. Okay, this is my set of rules. So that's it. Stop those stupid questions, please. This is the point D, 127XA extension. This is the set of standard rules. And 127AB extension. This is the variation. So you trade, you can treat it as a different pattern. Butterfly number one, butterfly number two. The butterfly number one has this set of rules, the butterfly number two has that set of rules. So whatever you trade, up to you, whatever you found it profitable. Okay, I trade that 127AB and I trade that variation BC leg, if you're interested in my personal preferences. I never trade this and I never trade that. let's go next. Let's go straight to the chart. Because guys, the chart is the only source of reliable information. So if you wish to know what are the secrets of butterfly, how can you profit good from trading butterflies, you should do the backtesting. No matter what other guy says. As far as I know, Scott Carney is mostly trading stocks, but if you apply the pattern to Forex, they will work, but they won't work exactly the same way. They will be a bit different from the numbers he had. So you should do your own backtesting, your own market research. If you cannot find the time for market research, you can't find the time for backtesting, well, I should say you are lazy. That's it. So you should quit trading as soon as possible. You will fail. Absolutely. Only those guys who are patient, only those guys who are disciplined to do their own market research, to do their own backtesting, only those guys will go to some success. Okay, I will share some information that will give you some food for thinking. And to do that, I am to demonstrate the butterfly formations on the chart. Let me draw them. Okay, swing identification large, butterfly is true. Okay, done. So within a matter of seconds, we have how many patterns? 355 patterns drawn on the chart, starting from 1999. Okay, what is left? You only need to calculate your stop loss, how many pips you generated, something like this, 67.2 and 60 of your target, and so on and so forth. So you can calculate them. I already did that for you, so I have piled that into butterfly backtesting Excel spreadsheet. So we have that example of how many? 193 examples, 192. We shouldn't calculate this line. Okay, so let me explain the spreadsheet. This is the stop loss, target 1, target 2, just calculating from the chart. This is the result 1, result 2. What is the result 1? Is the outcome of the trade. For first target, outcome of the trade if it hits second target. Okay, if we hit stop loss, we both have stop losses. How do you trade this butterfly formation? It's up to you. Conventional method of trading says that you should open a position, and once the target 1 is hit, you should close half of that position and leave the second half to run until the second target is hit. But you should also break even that second half of that position. I traded a bit differently. I opened 2 positions. The first position has the take profit of 1 and the second position has the take profit of 2. But those 2 positions are half less than if I would trade 1 position. For example, if I trade 1 position, I am risking 1 standard lot, but if I trade 2 positions, I am risking half of standard lot each. Those of you guys who say if you trade 2 positions then you double your spread, you are wrong, because my first position is half lot and my spread is, let's say, 1 pip. Yes, half lot of 1 pip means what? Means $5. And another half lot of another 1 pip, another $5 I pay to my broker, so totally I pay $10. If you trade the whole position of 1 lot and your spread is 1 pip, so you pay to your broker another $10 as well. So it is absolutely equal if you trade 2 positions or you trade 1 position, 1 double position or 2 smaller positions that are half. Okay, so the results for target 1, results for target 2, total results if you trade both. What if you trade take profit 1? What if you trade take profit 2 only? What if you trade total? The accuracy of take profit 1, the accuracy of take profit 2 The risk to reward for take profit 1 based on result of closed trades, and the risk to reward of take profit 2 based on result of closed trades as well. Okay, so what is this? TT, take profit 1, risk to reward. This is risk to reward. It should be H, I suppose. This is the risk to reward of trade to trade. This means if you take your stop loss as 1, it is needed for fixed percentage money management rules. Yes, if you take your stop loss as 1, then your target is 1 to 1 or 0.88 or 0.9 or whatever as compared to your stop loss, like this. So it is trade to trade. So in this trade we had it 0.88, next trade we had it -1, and we had 26. Why did we have 26? Because of spread. Spread is always added to your stop. Your stop becomes larger and it always detracted from your take profit. Your take profit becomes smaller once spread. Okay, next trade is this. So you have a trade to trade. What risk to reward you had in every trade, and this is the average of that. So if you trade fixed money management, fixed percentage money management, let's say 1% in every trade, yes, so you, in case you win, you will generate on average 0.73%, and in case you lose, you will lose on average 1%. Hope you understand this. But this is the risk of closed trades. It doesn't matter what was the risk to reward in every trade, but this is the average. You don't compare the stop loss and take profit of one trade. You compare the stop loss and take profit of multiple trades that are closed. You compare losing trades with winning trades, let's put it this way. Okay guys, so what is the sign that you should keep in mind? This is called large candles. If we go here, look at the structure of the butterfly, always the D point exceeds X with butterflies, but with Gartley's and bats, you see the bat, the D point doesn't exceed the X point. Never it exceeds. So this one is called a retracement pattern because it is a retracement as compared to XA, and this one is called an extension pattern because it extends past AXX. This is an extension pattern. Okay, with retracement pattern, if you have large candles within the CD leg, the pattern is most likely to fail. But with extension pattern, if you have a large candle within the CD leg, it doesn't really important. Doesn't really matter. So we have large candles here, like this. Let's go to filter some of them. Just enable gap and large, show only them. So let's calculate what we have trading them. Generate money. Yes. Let's go back here. What if we go here? Generate money as well. What if we trade the first target only? Well, almost break even, but still generate money. Okay, this is the first tip. It doesn't matter if we have a large candle or not. So with butterfly formations. The second tip, look at the accuracy of this first take profit. 58%, yes, and your average risk to reward is 0.73. Do the maths. 58 times you generate 0.73. So this means that you generate 42. Let's remember that. And 42 times you lose 1. Yes, so you 42 times you lose 42. If you detract that from that, so what is this that you generate? You almost generate nothing. So it is just to stay break even. Let's do the chart for pipsage. What if you trade fixed position size with the first target? Sorry, sorry guys, not this. I should add them. What if you trade fixed position size with target number 1 only? What will you have? You will have this result. Not very good. Well, it is still uptrending, but this drawdown is enormous. So let's calculate the maximal drawdown. 357. It is 357, and also we have 191 more. It means 457, 557, something like this. 550 is the drawdown if you trade only the first target. So although it generates money, the drawdown is enormous. But guys, what if you trade the second target only? What if you trade the second target only? Let's go paste some chart. Here it is. Look how smooth it goes. So the tip number 2 is don't trade the first target, trade the second target only. But when the first target is attained, you just close your position. When the first target is attained, sorry, don't close the position, break even the position, and wait until the until it hits the second target. So you see, what if you trade the first target, what if you trade the second target? Well, we could see what if we trade the total, the first and the second. Yes, we can see that. Let me paste the chart, just do the comparison. Which one goes smoother? Total, if you trade both targets, is this, both targets. Or if you trade second target only. You see? It goes smoother if you trade second target only without first target. It is the first and the second here. It is the first only. So it goes smoother if you trade. Let me put it here so you could see them all at once. So just don't trade the first target. Okay, another thing. Let me delete this. Another thing. Try to avoid fixed fractional or fixed money value positions. So what is the fixed fractional position? This means that you always risk 1% per trade regardless of how large your stop loss. If it is less, you have 20 pips stop loss, it will be 100% loss. If you have 100 pips stop loss, it will be the same percent loss, let's say 1% loss or whatever, 2% loss, it doesn't really matter. So if you trade position, risk position or money value position, this means that you trade only, let's say, $10 per position. This means what if you trade 1 or 2% per position? Okay, you see those results with target 1 as well. Okay, what if you get rid of that target 1? So we should do some adjustments here. Instead of target 1 results, we should have target 2 results. It is here, target 2. Okay, and now let me fill in all the tables. If you have it this way, now see how it improves. It improves radically. Okay, also what you should keep in mind, you should know your largest drawdown. After you have your general chart, you should calculate your largest drawdown. So in this case it is 1659 to 1403. 1659 59 1403. It means the drawdown is 256, and if we divide that 1659, it means that we have 15% drawdown, 15% maximum drawdown, risking 2% every trade. This means 2%. 2% every trade. So you should also keep that in mind. If you don't want to lose more than 30% when you face the largest drawdown, if you don't want to lose more, then you should not risk more than 4% per trade, like this. If you have 4% per trade, your maximum drawdown will be about 30%. Okay, 24.78, 18.19. Let's calculate that. 24.78 negative 18.19. 19. It is 659 divided 24.78. It is 26%. Roughly it is 30%. So you should keep that in mind, that you shouldn't risk more than 0.04 per thousand. The general money management rule for you based on butterflies. Trading only the second target. I don't talk about the first target anymore. So trading only the second target. Okay, what else you should know about? I think you should know about the fixed position, because it gives you the lowest drawdown possible. If you trade only the fixed position, it means 0.02 or half lot or 1 mini lot on every trade, regardless of the stop loss size. Okay, let's calculate the max drawdown with that. 14.19 negative 14.84. 14.19 negative 14.84. So this means 65. What is this? Why is that negative? 16.19 14.84. 16.19 14.84. So the largest drawdown is $135 if you trade 4 micro lots. We can increase it twice if you are good to digest 30% drawdown, maximum drawdown. We can increase this twice to 300. Okay, 2007. Okay, let's increase that twice. You see, fixed position gives you more room for bet manipulating. It gives you more space for bet manipulating. So 0.08 is a fixed position, 8 micro lots. So we only look at this and at this chart. So totally this chart generates maximum 24.58, and let's switch that back with 4% risk. It was generating 29. Well, probably percentages is a bit more profitable if you trade percentages. It is maybe a bit more profitable if you trade 4% per trade maximum, because you generate 29 risking 30%, and you generate 24 risking the same 20%, so you generate a bit more. Okay, so once again, guys, large candle is not important because it is an extension pattern. Second, because of that risk to reward, trade to trade, guys, that accuracy is not enough to generate some consistent income. It will be around break even. So only trade the second target. And the third thing, the most profitable money management strategy with butterfly formation is the percentages. Just use percentages. With the same drawdown, you will generate more money. Okay, hope you like those tips. Hope you will fine-tune your strategies according to what I've said, and you do the backtesting and your own research work to find out if what I'm saying here is actually true or not, because you never know, maybe I'm lying, but I can say that it's not a scam. 2004, 10 and 20, just check this. 2004, 10, 20, 20. Let's go to this date. It is a loser with large candle, 9 o'clock. Okay, 9 o'clock, it is a loser and with large candle. That's it. They are taken from the chart. Okay guys, I have a great advantage because I have master pattern search and I can find hundreds of examples within seconds. If you do that manually, it will take you for a while. I remember I was doing the backtesting manually. 100 trades took me about a week per pair and one time frame. So one time frame, about a week for backtesting to find 100 trades per butterflies, only to find them. And I also needed to calculate the pips, to write down the time, and so on and so forth. So it was almost 2 weeks, 1 week more to type it all into an Excel spreadsheet. Okay, and this took me about 3 days to do that Excel spreadsheet. 2 or 3 days, don't remember, because it was pretty long time ago when I've done that backtesting. So guys, I hope you like that. If so, subscribe to my next videos, because I will share some more tips, I will share some more backtesting results, I will share some more details, I will tell more details about those patterns, not only the butterflies, maybe ciphers and Gartleys. Just write down the comments what pair you want, what pattern you want me to tell you to tell you about the details, what pattern, and I'll try to shoot another video about that, so you will trade it profitably. Until then, good luck, good trading, hope you see you soon.